A special thank you to each of our subscribers who make this channel possible. Here's today's story. As the United States approaches a pivotal election week, the stakes have never been higher for investors worldwide. With polls indicating a razor-thin margin between the two leading candidates, the next few days promise to be filled with uncertainty and anxiety for financial markets. The starkly contrasting policies of Donald Trump and Kamala Harris have left traders scrambling to assess the potential fallout from either outcome. Donald Trump, the incumbent president, is advocating for an extension of his 2017 tax cuts, along with additional cuts targeted at corporations and the wealthy. He is also proposing significant increases in tariffs on imports, particularly from China, and has outlined a controversial plan to detain and deport over 11 million undocumented immigrants. Furthermore, Trump has enlisted the help of tech mogul Elon Musk, who has pledged to slash government spending by an unprecedented $2 trillion, effectively gutting vital social welfare and healthcare systems. The implications of Trump's policies are alarming. Analysts predict that under his administration, U.S. government debt could soar by approximately $7.5 trillion, reigniting inflation that has been gradually approaching the Federal Reserve's 2% target. This economic environment could lead to increased volatility in financial markets as investors react to the potential for higher interest rates and a surge in Treasury supply. On the other hand, Kamala Harris presents a contrasting vision for America. She plans to allow the 2017 tax cuts to expire and propose tax increases on corporations and the wealthy. While her policies would still contribute to rising U.S. deficits and debt, they are expected to be less inflationary than Trump's approach. Harris's focus on social welfare and healthcare spending could stabilize the economy, albeit at a different cost. In terms of foreign policy, the candidates' divergent views are equally stark. Trump has hinted at withdrawing U.S. support from Ukraine, potentially ceding ground to Russia. His isolationist stance raises concerns about a retreat from America's traditional alliances and multilateral organizations. Conversely, Harris aims to maintain support for Ukraine and uphold America's role in global diplomacy, particularly in the Middle East. The potential outcomes of the election are further complicated by the composition of Congress. A sweep by either party could grant the winning candidate the power to implement their policies without compromise. A Republican sweep would likely be detrimental to the bond market due to inflationary pressures, but could boost the stock market thanks to Trump's tax cuts and deregulation efforts. Interestingly, this scenario could also benefit cryptocurrencies, as Trump has recently expressed a newfound enthusiasm for digital assets. In contrast, a Democratic sweep could create headwinds for the stock market, as investors react to Harris's tax policies. However, it would generally signify a continuation of the current administration's economic policies. A divided Congress, where each party controls one chamber, could limit the ability of either candidate to execute their agenda, though it may not prevent Trump from pursuing his tariff policies. Historically, the stock market has performed well under divided Congresses, and some analysts argue that the market has fared better under Democratic presidents, including Biden, compared to Trump's term. This context adds another layer of complexity to the current election, as traders grapple with the potential for a range of outcomes. As the election draws nearer, market sentiment has shifted. Confidence that Trump would secure a second term has waned, with recent polls indicating a neck-and-neck race. This shift has been reflected in the stock market, which has experienced a slight decline. Bond yields, which had previously surged in anticipation of inflation, have stabilized, while Bitcoin's price has seen a notable drop. The implications of this election extend beyond the U.S., with America's traditional allies anxiously watching the developments. The threat of a trade war and a shift away from the global order established post-World War II could have far-reaching consequences. Despite the current economic growth and declining inflation rates in the U.S., the uncertainty surrounding the election creates a precarious environment for investors. The Federal Reserve's upcoming meeting is also critical, with expectations of a 25 basis point rate cut. This decision could further influence market dynamics, especially in the context of the election results. The interplay between the election outcome and monetary policy will be closely monitored as investors assess the potential risks and rewards in the coming weeks. In conclusion, the upcoming U.S. election stands as a defining moment not just for America, but for the global financial landscape. With two candidates offering vastly different visions for the future, Investors must brace themselves for a period of volatility and uncertainty. The outcome will undoubtedly shape economic policies, international relations, and market dynamics for years to come. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.